Every battle is won before it's fought. Sun Tzu, The Art of War. We'll talk about that next. G'day traders, Stacey Burke from Stacey Burke Trading. Today talking about every battle is won before it's fought. Saturday, non-farm payrolls last night, but this week we had some huge moves in the pound and the euro pairs. Again, some very basic textbook playbook setups. I didn't get all those trades, but I had some good trades this week. Virtually trades that offered the what I call my perfect playbook textbook setups. Trades that I can predefine my risk, and I've got an asymmetrical risk-reward opportunity in a strongly moving market. So one of the things I talked about in the other video where we talked about the time of day and the importance of understanding the time of day. I'm just going to reiterate some of that, and I'm going to follow that up with a couple of videos in the next couple of days, specifically targeting what I'm talking about. As a retail trader, one of the things that I see out there that's on the internet is a lot of the same stuff rehashed with price action and different types of trading approaches. But I think what really is neglected is the understanding of the importance of the time of day. Now, there's 2 times a day that I trade, and that's at the Asia Close, London Open, and at the New York Open. There are other times where there are good trading opportunities that present, but based on my time zone and where I'm at and the time of day where I go to bed and everything else, I don't stay up to trade the London Close. And I don't particularly trade Asia, even though I'm a morning person. I just find that my approach, although there are some good trades in Asia, occasionally I may take a trade in Asia, but my main focus is at those 2 particular times a day. Now I'm just going to sort of hash out the importance of building your playbook and focusing on a couple of specifics. Again, as a retail trader, the more simple you can make your trading system, the more likely you are to duplicate your results, but also minimize the likelihood of entering into less than ideal trade setups. So again, as a retail trader, the odds are stacked against us. Banks control largely 60% of the volume. A lot of the price action is algorithmically driven. And in order for me to have some sort of edge, I need to target a couple of specific things. The reason why that time frame is important to me is that that's where the volatility spikes and when it increases. Obviously, there are other catalyst type events. I don't trade the news, but I will take trades prior to the news and after the news if my ideal trade setup presents. And one of the key things with understanding that for yourself is that, again, if you can keep narrowing down everything about your approach to trading to 1 or 2 specific types of setups. And again, for me, the time of day, that means I can duplicate that ideally, especially if I have positive expectancy and I'm able to, in some way, really define my risk as tightly as possible. So again, every battle is won before it's fought. You need to look at what you're going to be able to do that's going to be sustainable over the long term. So I know that every single day, at those particular times of day, the banks come into the market. The market opens in London, the market opens in New York. When Asia and London overlap, the volume swells, the volatility increases, and there's a particular type of setup that happens and that occurs. In the pre-market, the first hour of the market open and potentially the second hour of the market open, and there's usually a trap. Okay, so what you have to ask yourself in those particular times is, are you in the trap, or is the actual open of the market the trade? It's either the trap or the trade. And so again, with your approach to trading, at any point you want to be looking at the market in how you assess it to determine whether or not you're in the trap or if you're in the trade. And that's important. Those are the 2 questions I ask myself every day based on my assessment of the market prior to the Asia close. What I'm looking for is to participate into the trade. So what I'm looking for is trap traders. And again, every battle is won before it's fought. So I need to be prepared prior to that happening so that I go into the market and I'm ready to participate in the trade and be able to identify my risk, assess that, and then also have an expansion of a range that I can target as a 4 or 5 to 1 multiple or 3 to 1 multiple of my risk factor as a profitable trade setup. So that's going to come from you building your playbook. That's going to come from you studying your approach to the markets. Again, my entry-exit criteria is very simple. It's all built around that time of day. I look for bullish candles that are trapped in a bear market or bearish candles that are trapped in a bull market. And I will go down to the smallest time frame to be able to enter that market in terms of a 5-minute chart to do the same thing, to identify a bear candle in a bull market that I can predefine my risk by in that bigger range. So again, the hourly charts. So I may target that on a 5-minute based on the hourly chart setups so that I can get a range expansion again that's maybe 5, 6, or 7 to 1 as a profit target. So am I going to make mistakes? Am I going to get stopped out? Absolutely. But again, the more that you sharpen your sword on the stone every day and get better at that, the more likely you're going to be able to be consistent and duplicate that with your results over and over. So every battle is won before it's fought. So every day, again, building your playbook, your best trade setups, again, looking to make it as simple as possible so that there's no analysis paralysis. And however you need to do that, again, as a retail trader, if you've got all kinds of other, if it's all price action based and there's no time structure to that, you're going to be trying to chase trades all over the place over the 24-hour market cycle. And again, those times of day are very specific. If you go back and look at your hourly charts or whatever time frame you want to identify that on, but it's very, very easy to see on an hourly chart when the volume comes into the market, when the volatility increases, when it dies out, when you shouldn't be in the market unless you're trading on very small time frames. But again, the smaller the time frame you go, the more likely you're trading against computer algorithms. So hopefully you got some value from today's video, traders. Every battle is won before it's fought. Make your strategy as simple as possible, as duplicatable as possible, where you can predefine your risk, you have an asymmetrical risk-reward opportunity, and you can be able to reproduce those results over and over and over again as time goes on. So hopefully you had a good trading week, traders. Again, set your goals for the coming week. Work on your playbook. If you haven't done so, go to my homepage, get my 7-step daily routine for high-performance traders. It's an audio file. You can take it wherever you go, but use it to build your own daily routine. Even if it's 5 minutes a day, taking a screenshot, making some notes. You should be doing your daily psychology diary, 1 sentence a day. What did you learn yesterday? One new thing every single day. Move in the direction of constant progress. Stay emotionally oriented, and may the markets go with you. Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.